Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cashflow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, our guest for this week's show is real estate investment expert Ed Mathews. Now, Ed is the founder and president of Clark Street Capital, a privately owned commercial real estate investment firm that specializes in helping C-level executives create passive income streams through real estate and private equity investments. And so, guys, without further ado, I'd like to welcome Ed Mathews to the show. My friend, how you
Hey,
doing today?
I'm good, man. How are you? Good to see you.
Yeah, good to see you again. I know it was just a short period of time. I was on your podcast, in
Right.
the
Yeah.
last month or
Thank you.
so. I had a great time, great conversation. So looking forward to flipping it today, flipping the script on you, and we get to talk shop on what you guys have going on. What's exciting. What the last couple of years might have looked like, and just
Yeah.
everything and anything else in between there. So with
Sure.
that. Before we start going down some rabbit holes, Ed, and having some fun conversations, maybe let's back it up a little bit. I gave you a very brief introduction. I know there's a little bit more to your story than that. And so for folks that don't know you, don't know Ed Mathews, who you are, what you do, or what you have done, and just again, generally speaking, take a few minutes and tell our listeners a little bit more about yourself, if you would.
Yeah, it's the old Admiral Stockdale thing, right? Who am I and why am I here?
That's right.
So, Ed Mathews. I'm the principal at Clark Street Capital, among other companies. We do focus on value added multifamily. Are starting to graduate into more Class B properties and now development as well. I spent about 24, almost 25 years in Silicon Valley, flying all over the country and sometimes all over the world, slinging software and services, and uh, have been investing in real estate since 2011. And right around 2017, early 2018, those two worlds started to kind of collide in that uh, I realized, first off, I married very well, and my wife was telling me that I was missing a lot of good stuff at home, and she was right. And I was traveling 150 plus nights a year,
Wow.
and I have two amazing daughters and an amazing wife. Like I said, I married well. And I said that twice because she's in earshot. She's probably right over there. So I want to make sure I get that nailed. But the fact is that I wanted to break free. And I was at a company called DocuSign, which a lot of the real
Mhm.
estate folks probably have heard of. And there was a change in my management structure, and I wasn't very interested in growing, in terms of taking a promotion. And it's kind of one of those up or out kind of situations. And so, as that started to come to fruition, I sat with my wife Patricia and was like, I think the real estate thing is the way to go. It's at that point, cash flow had surpassed our monthly budget. So, from a freedom perspective, we had the flexibility, and I had also, had some, I was blessed to participate in a couple of initial public offerings. So that
Hmm.
helped as well. And so we dove headfirst into real estate. I gave my notice in January of 2018, and by February of 2018, I was full time on Clark Street, and so we've been doing it ever since. Whole
All
lot of fun.
righty. Yeah, no, fantastic. Appreciate that background there. So I want to back it up a little bit. I think you had mentioned
Yeah.
2011 was the year when you at least first started buying real estate. What was that? Just looking to park some capital. You're doing really well with your software job and just looking to put it in some various investments. Is that how it started?
So in 2008, a good friend of mine handed me Rich Dad Poor Dad. And I read it, and, it fundamentally changed the way that I viewed my career and my future. I loved my jobs. I was flying around and meeting incredibly talented people and selling them software and becoming their partners. It's gratifying. It's a whole lot of fun. Status wise, it feels good, right? But there's a trade off there, and I realized that in order for me to get where I wanted to go from a retirement perspective, from a time freedom perspective, my W-2 was never going to get me where I wanted to go. And so I started, doing a ton of homework, It actually took me about 3 years to kind of ratchet up the courage to pull the trigger on the first deal, which is what the delay was between '08 and 2011. And from there, we bought a handful of small multifamilies. I would flip a couple houses with some partners. We'd take that capital. I'd buy a couple more multis with that, and rinse and repeat for
Yep.
better part of 7 years. One day you wake up and you don't want to travel 150 days a year anymore, and it's okay because the cash flow is there to support that.
Yeah, yeah, that's brutal. 150 days a year, man. Kudos to you. That's rough. Lots of
Yeah,
time in the air, lots of time in hotels, right?
yeah,
Lots of time
it's funny.
eating out as well.
Right. Yeah, my kids were always like, "Oh, you get to travel everywhere," and I'm like,
Isn't that funny?
eating a quesadilla at the end of a bed, at the end of sitting at the end of a bed at a Courtyard Marriott somewhere in the world watching Storage Wars is not exactly a glamorous way to spend your evenings. You know what I
Isn't
mean?
that funny? Yeah, I mean, I grew up. We didn't have the money as kids growing up to take. If we took one vacation year and it was a road trip, we drove somewhere, right? It was always within driving distance. I think there was
Yep.
one year we took a flight, and that was kind of like the decade trip, right? Like that
Right.
was the once in a decade trip. However, it was always road trips, and so I didn't fly a lot growing up. And my dad did he worked for a large technology company and did trainings. He traveled most of the time. It was just in the U.S., it was like North Carolina, South Carolina. He was somewhere on the Eastern Seaboard, and so they weren't long trips. But he was always flying. He was in a hotel, and I was like, man, that's so cool. And then every once in a while, when we would go on our family vacation, we'd always stay. I think it was the Hilton chain that he would stay at. He always had points, right? And I thought it was the coolest
Right.
thing, that ultimately we would stay basically for free, I guess you could say, by using his points that he's racked up over the year. But really, it was just more being budget conscious because my family, thank God he had that job because we really didn't have enough money to actually probably pay for that hotel for the entire week. But I thought it was so cool that he traveled. And sometimes you got to travel internationally, but and I do love travel. I still travel for work quite a bit, but man, do I love being home with my wife and my boys. I love that quite a bit
Yeah.
more than I do rolling solo and God knows where, US, looking at
Right.
property. And I love looking at property. I enjoy that. However, I don't enjoy being away. I'd rather, if I'm
Right.
traveling, I want to be with the family, right?
Right.
So,
Same. Yeah. I mean, I don't mind travel. I enjoy it, and as
yeah.
part of the job, that's fine. But I'm one of those in at 5:30 a.m. catch the flight, meetings until 1 o'clock,
Yeah.
hop the plane back at 3, so I'm home for dinner, that kind of thing.
Yeah,
Um,
I'm always a first flight of the gate, first
do,
flight of the day type guy. I
do.
do not enjoy getting up at 3 a.m. I do not
No,
like that part. However, I want to make sure that damn thing's not delayed, right? I want to ensure that I
exactly
get
right.
where I'm going. So it's funny.
Yeah.
My wife hates flying with me. If we're actually going to go somewhere and it's like her and I'm like, we're taking the first flight. I'm sorry, babe.
Yeah.
You gotta suck it up. Sleep in the plane or
Right.
something because I don't want to be late and I don't want to be
And,
delayed or get stuck in the airport. So
and I'm one of those guys that's got to be there an hour and a half, 2 hours beforehand.
I always cut it super short either way. I'm like give me there 45 minutes ahead of time. And there's been a few times, it's just like TSA is a little backed up. I'm like, oh boy,
Right.
the pre-check is a little backed up. But haven't missed
Yeah,
a flight
I got
I've
enough
been
stress
15
in
or
my life.
20 years.
Yeah, right. I've got enough stress in my life. I don't need to add to it.
That's right. That's right. Fair enough. Well, back on track here.
Yeah.
Clark Street. I know multifamily. It's kind of your MO. Would love to maybe get a sense of kind of what are you guys working on today? What are you excited about? Would like to also just get a general sense of we're kind of in an interesting time. We're still last years were a little volatile. Rates
Yeah.
are still high and are seemingly going to be high now for probably for longer than anticipated.
Yep.
Um, got a new president in place, right? Which hopefully that will bring some benefits down the road here, at least as real estate investors and business owners. But I guess so. Let's start with Clark Street. I mean, what are you guys focused on today? What are you excited about?
So we're actually going through a pretty major transition. So historically, I tell people, I buy crappy apartment buildings from landlords who aren't very good at their jobs, right? And we would go in and make them clean and safe, and go through all the MEP and upgrade common areas and units, and slowly but surely over a 3 to 5 year period, bring the building up to as close to turning basically a C minus building into a C plus building, right? Is
Hmm.
the and over the course of the last, gosh, 7 8 years, that's what we did. turns out managing, 15, 20, I think 22 buildings is a lot of work. We herded a lot of cats. And so, over those couple of hundred units, we've been slowly but surely selling those off into this market and creating a cash position so that we can go get much larger buildings. And so right now, we're focused on kind of two major things. One is development project. We acquired a 58-acre plot of land that originally was a flip, and that's an interesting story I can get into in a minute. And so we are with that property. It's going to end up being somewhere between 20 and 40 affordable units. At least part of it will be affordable, and then as many as another 40 or so duplex build to rent buildings as well, properties as well. And our intent is to operate that and hold for minimum 10 years, but probably a lot longer. And then in parallel to that, we're raising a fund to go out and acquire Class B properties outside of the state of Connecticut, much larger properties, probably in that 50 to 100 unit range. And right now we like Indiana and North Carolina.
Okay. Okay. Fantastic. So development. Let's talk about that. Obviously,
Yeah.
that's exciting project. Is it the first development project that you've been involved in?
Uh, as the principal, yes.
Yeah. Okay.
As a limited partner, no. But so I've been the guy looking over the shoulder a bunch of times, but this is the first time we're doing it on our own. And so yeah, so we acquired. So I flip houses in the winter just to keep my guys busy, right? And so we would market to the local area vacant houses or houses that had high equity. And right before COVID, probably December, January, prior to COVID, kind of hitting the U.S. We got a response to one of our marketing messages. It was a direct mail,
Mhm.
and said, "Yeah, I want to sell. My grandmother just passed. I want to get rid of the house. I'm tired of paying taxes on it. There's a squatter in there, and I want you to get rid of him. I live in Texas. Just I need you to solve this problem for me." And so I drove by it. It's mile or two from my office, and immediately went back to him and said, "Done. Let's work out the number." And we got that done fairly quickly. And I did something I normally don't do, which is I bought a property without looking at the plot plan or checking out the tax situation or anything like that. I had given myself some outs in the contract just in case, but so we settle on the number, and like 20 minutes later, the owner calls back and he said, "Well, what do you want to do about the land?" And I said, "What land?" And he said, "Oh, that acreage behind is also part of this property. It's 58 acres. Do you want that?" And I said, "Well, it depends how much you want for it." He goes, "Nothing. I just don't want to pay taxes on it anymore." I said, "That is the right price. You have a deal." And so we, immediately put that on. We immediately papered it. 2 weeks later, COVID hits, or 2, 3 weeks later, COVID hits and the world shuts down. 2, 3 weeks after that, we find out that he's not the only heir. He's one of 9 heirs spread out all over the country. They don't like each other. They don't talk to one another. And so we gave him a list of local probate attorneys, and they picked one. And poor Dave Rosenberg, who certainly earned his money on this one, basically got those folks to agree to sell over the course of about 18 months. And then once the courts opened up back here in Connecticut, it was another, I want to say 16, 18 months to kind of get through the whole probate process because of the backlog.
Wow.
And lo and behold, so that was March of 2020 is when we got that deal done. November of 23, I get a phone call. "Hey, we're ready." I'm like, "Who are you and ready for what?" And because basically the way we left the contract was an open-ended contract, and when you guys are ready, we'll honor the agreement. And I can't say I forgot about it, but it certainly wasn't on my day to day. And yeah, they called right before Thanksgiving and said, "Okay, we're ready to close." And I said, "Okay, well, in all candor, the money that I had allocated for that project, I've spent 3 times over already. So I need 90 days to get it together and pull the deal back together. And they were totally flexible with that. And we ended up closing in, I think, late February of 24. And we've been doing the survey work and wetlands and entitlement work ever since, and as well as now rehabbing that house and making it clean and safe and ultimately beautiful to sell off, which we'll
Wow.
go to market in probably April.
Isn't that amazing? The seemingly simple, straightforward deals are always the most complex ones, right?
Right?
Man, so we glossed over the fact that you basically got 58 acres for free, included. So just curious, what was the, I know it was raw land, that was
Right.
part of that deal, but like if that had been a separate parcel, maybe it was, but what was that worth? I mean, in its raw state, what was that land worth?
Probably 400 or 500 grand,
Oh
give
my
or take.
gosh. And I
Yeah.
can't believe none of the heirs ever said, "Man, I'm not. No, I don't agree to that price." I mean, how about this land that we're selling? No one raised their hand and said that.
And
That's great.
I didn't offer. I mean,
Sure.
one of the concessions we made was we did a feasibility study to figure out how many buildable lots there were. We hired a civil engineer, and he came back to us and said, "Yeah, you're probably looking at minimum 7." So we went back to the owner or the executor and said, "Look, we need a minimum of 7 for this to make sense for us. Anything above and beyond that." When we finish our survey, we'll pay an extra, I think it was like $7,500 a lot, above and beyond that. And we found a couple extra lots. So, we stroked a check for 15 grand happily, to kind of make it all right. But yeah, no, they didn't want to pay the, I don't know, 8 or 10 grand a year that they were paying on the taxes.
That's crazy. That's insanity. So the house that's there, we have to tear it down in order to,
Nope.
no? Okay.
No, it's a
Fantastic.
1,300 square foot colonial or a ranch. From a flipping perspective, those are the best ones to flip because you can get at everything from the basement. And so we're in the process of doing the interior work. New roof, new windows, new siding, new doors, new flooring, new kitchen, new bathroom, new paint, new lighting, new deck, uh, and sell, dismount, right? New heating systems. Um, and somebody gets a really good starter home, and we get a really good deal overall. So when we sell that house, we'll basically own the entire property free and clear.
Oh, that's wonderful.
More or less.
So I know you're rolling through the entitlement process now. I know that you've said that you've been able to look over the shoulder of others,
Yeah.
that are in the development space, and it just kind of, you'll see the process. But this is the first time running it as a principal. Talk to me about some challenges that you've faced outside of just getting the damn thing closed. It sounded like that was a challenge in and of itself, but you got it to closing. We're rolling through the entitlement process. Any other bumps along the way that you've encountered?
Constantly, right? I mean, obviously, step one is we got to navigate wetlands,
Hmm.
and it turns out that probably about 20 acres of the 58 is wet, which is fine. And so, we've navigated that. I have a very close friend of mine who has been mentoring me. He's not a partner. He doesn't want to be, he's a retired builder himself. And he's been very generous with his time. And, Rich has walked the property with me, I don't know, half a dozen times and kind of pointed out, okay, you want to watch out for this, stay away from that. And so, I have someone who is advising me every step of the way. Um, and he's my bat phone when something, does happen. But, slowly but surely it's just a process, right? It's a plan that we're checking the boxes and executing. And I think the next step of this is where it's going to get a little bit complex because so in the state of Connecticut, I mean, every state has this issue around affordability, but in the state of Connecticut, affordability is a really big problem. And so, like in the town that I live in, it's a good working class to middle class, upper middle class town. School system's excellent, and so, but if mom and dad split up, you can't afford to own two houses in this district. Or if you're a senior and you're getting taxed out eventually of your houses, there's no way to stay in this area. And so affordability is something that the Connecticut has paid quite a bit of attention to lately. And so there's a program called 830G, which is a zoning override. And not to get too geeky on you, but basically what it says is if we as a developer commit to 30% of the property units that we build, if we commit to 30% of those being affordable, and by affordable, it's some level of fair market value according to HUD, right? Um, then workman's housing and down all the way to Section 8. If we agree to um, maintain 30% of those units for a period of 40 years, 830G will override the zoning of the R2 zoning of that property and allow us to build multi there to
Hmm.
solve to help solve a portion of the multifamily or the affordability problem. And so that's the next kind of step. We're meeting with town planners and trying to figure out, is this a 830G being imposed, or is this a friendly 830G type of a project? And I'll let you know in 2 weeks. That's when I think it'll start to get complex, because the next layer of that is the not in my backyard folks come out and
Yep.
say, hey, no, we don't want this here.
Yeah, no, I was about to ask you, just, I guess what do you feel your chances are of getting this through, and then ultimately what happens when the neighbors want to raise their hand and say, obviously not my backyard. So just curious, I'm curious as to what your team looks like. Obviously, these
Yeah.
scenarios, it's critically important to be
Right.
locally tied, right?
Right.
To have team, the more people you know, the better, right? And so how'd you go about, who'd you bring in? And why? Like, who'd you choose to be a part of your team to help work through this process?
Yeah, excellent question. So the easy ones are the civil engineer
Yep.
for
How,
overall plot
how
planning.
do you choose the right one? I mean, how do you choose the right civil engineer even?
I picked up my friend. I picked up the phone. I called my friend Rich and said who were the best three to work with in the area, and he gave me those three, and I picked one.
Got it.
I
Got
really
it.
picked.
Hmm.
And then we brought in a surveyor to do the legwork. We brought in a wetlands expert to do the to identify where the wetlands were. That person will also help us with soil testing. I have a guy who does all of my septic systems, so he'll do what are called deep holes, which is because we're in the country, it's septic, so we have to test with every lot. We have to test the dirt to make sure that it can support
Hmm.
septic. We have an excellent land use attorney in Marjorie Shansky. So Marjorie's job is to help us and the town navigate the 830G requirements. And, in all candor, the way this plays out, there's not a lot that local folks can do. If we really want to go hardcore on this, there's really nothing they can do because the state comes in and imposes the zoning change.
Uh,
Um, there are planning and zoning, local planning and zoning gets taken out of the process. So not in my backyard
yep. Okay.
will be blunted, but if they want to make it, you can sue anybody for anything, right?
Yeah.
So, if they really feel strongly about it, that'll happen. I think the way we combat that is by just over communicating and helping people understand that this is actually a good thing for the town.
Hmm.
And the fact is that these properties are going to be tucked way back in the woods, so you're not even going to have to stare at them, right? You won't even know
Yep.
they're there. It just looks like another neighborhood, from the street. So
And then financing, what's that look like? And I guess your second part B of that question is just appropriately underwriting the uncertainty around interest rates and where they're going, where they might
right,
be, at different stages of this project.
right. So construction wise, depends on what we get approved. Because there's still a little bit of discussions around, can we get in 20 units? Can we get in 40 units on the larger apartment buildings? Um, I work with Newmark out of New York to help us with the agency funding. So I would, that is probably going to be 60 to 65% of our capital stack. The rest of it will be equity from private investors in our own capital. And I keep it super simple, right? And
Hmm.
so, we're going into this knowing that it's probably a 10-year minimum 10-year hold.
Got it.
And mainly because it will cash flow. Once we have the buildings occupied and stabilized, because they're brand new buildings, a lot of the things that you have to figure in terms of reserves, you still have to have reserves, obviously, but maintenance reserves are a lot less because it's a brand new building, and in the
Yep.
first 2 years, everything's under warranty, right? So that helps us with cash flow. The way that our loan will probably work is that it'll be an interest only loan for the first. We've asked for 5 years. They've offered 3. I'm
Mhm.
going to continue to push for 5. And so that blunts the 7 and change percent interest rate that we're kicking around. It's non-recourse, so I'm willing to pay for that extra half point. Um, and we're going to date the rate. So as rates kind of move back hopefully into the um, low sixes, high fives, we'll look at refi opportunities and put it under long-term debt. Probably, under Fannie Mae, it's 30, 40 year type notes. So
Yeah.
I'm not interested in our, with a project like this, I'd rather just put this under 30 or 40 year debt rather than ride the wave and
Yeah.
continually refi out of 7 or 10 year arms. Um, like I said earlier, I have enough stress.
Yeah, no, I agree with it. It's a perfect project for it. So, property management, then I'm assuming you guys have enough other units. Are you vertically integrated or do you guys
We are.
outsource?
Yeah.
Okay.
So Clark
Okay.
Street Management does all of our internal management. We've got a team that once this is put in place, we will grow. There will most likely be north of 75 units. So
Hmm.
that cash flow supports having a superintendent on site. And so
Yep.
that's probably what we'll do. And then support that person with the contractors that we work with in the area.
Yeah, good deal. Well, that's exciting, man.
Yeah, I'm
Congrats.
excited.
I mean, I know you're not there yet, but making all the right moves and sounds like an exciting project. So, I'm assuming that your eyes are always peeled for new development opportunities then? Is that something that you're actively looking for?
Yeah, I mean, my role here is twofold: find new deals and raise capital.
Got it.
And so that's my partner handles a lot of the operational pieces, and so I am always on the hunt. In fact, yesterday morning I was walking another 60 acres, not too far from here, trying to figure out if we could make something of that as well. So
Well, exciting. Well, good deal. Well, I want to be conscious of the time here, Ed. But one last question I love to ask listeners. You've been at this now for long enough. You've been involved in many transactions. Um, you know, some good, some bad, some indifferent. Right?
sure.
There's always those that are more challenging than the others. But if what's the one deal that comes? Maybe there's more than one, but what's the one deal that comes to mind that you lost sleep over? Maybe you lost some money over. There was a lot of
Yeah,
undue stress. Maybe ended up in a lawsuit. Just the ones that make your hair fall out. The ones that just if you could just completely forget about, wipe from your memory, life would be so much better. Is there a deal that comes to mind? If so, maybe some basic
absolutely.
details of it. And then ultimately what happened.
Um, I have two. So one was a simple. It was earlier in my career, and one of the things that I did early on is I was operating out of my own bank account, which was a good and a bad thing. The good is that I get to keep the profits when there was profits. Bad was it made me a bit of a cowboy, right? And so I bought a property, 10 unit, and quite frankly, I over leveraged it. And I thought that we could grow rent fast enough to be able to blunt the fact that I overpaid for the property. And in parallel to that, insurance started to creep up, and there were months where we were 150, $200 a unit profitable, and then we'd have a vacancy and it got real tight real quick, right? And so ultimately ended up selling that property just because I didn't want to. We sold that property within a year of buying it just because we realized that I had not done the due diligence that I needed to, and had I bought that well, I'd probably still own the property, but
Mm-hmm.
C'est la vie. The other one is so I bought a fire damaged 12,000 square foot property next door to. So I buy a 6 unit building in a town called New Britain, Connecticut. 6 a.m. My property manager back then, we were using a third party. Cecilia calls me at like 6 a.m. And when your property manager calls you at 6 a.m., it's
Mm.
never, ever, ever good news, right? And she said, "Hey, turn on the news. Your building is on the news right now." And I was like, "Okay." And turn on channel 3, and next door to my building is a 12,000 square foot property that is on fire. And she said, "Your building's fine. I'm literally standing in front of it right now. We're good to go. But I didn't want you to turn on the news and see that that this building was on fire, 10 yards away from your building." Um, Turns out that building was not owned by the most scrupulous of people, and it had gotten struck by lightning in the ceiling and in the basement, and that's actually what had caused the property to burn. Ultimately, we tracked the guy down in Brooklyn, and I bought the property for 50K. I had walked in the interim. I had walked a civil engineer friend of mine through it, and an engineer friend of mine through it, and said, "Okay, how bad is this really? Can this be fixed?" And it turns out that the damage was fairly localized, and it could be fixed, right? Beautiful part of these 1800 early 1900 buildings is they were extremely well constructed.
Mhm.
And so we ended up buying the property, and first step is to secure it so the folks don't get nosy and climb in there and get hurt. And then the next step is to uh, secure it from the weather. And so we were in the process of securing it from the weather, and my contractor hired a sub, and I had vetted our current contractor. I'd done tons of work with him. I did not vet his sub, and turns out his sub. So the way that those old brick buildings work is that there's cross beams that basically create tension on the walls to hold them up.
Mhm.
And the job was to get rid of the rafters of the burned out roof and the decking so that we could replace it. And what they did was they cleared the entire fourth floor of all
Oh boy.
support, basically making a brick box. And I got a phone call from the contractor saying, "Hey, the back wall just fell into the parking lot,
Oh my
um,
God.
50 feet long, 20 feet tall, three courses of brick into the back parking lot. No one was hurt, thank God." And I said, "Okay, everybody out of the building?" "Yep, everybody's out of the building." "Okay, stay out of the building. Um, I'm on my way." And by the time I got there, the front of the building had fallen into the building, cracking all 34 floor joists and
Oh my
destroying
God.
the strength of the next floor. And turns out that subcontractor had a roofing license, did not have a demo license, and was insured for roofing, not demolition. And so that became a whole thing. And
Oh my gosh.
it turned out okay. I ended up having to write a whole bunch of very large checks to keep that building up, only to decide that it wasn't worth saving. And so we took it down. And then I sold the property for, well, actually, in the interim, I sued everybody and got most of my money back, and then ended up selling it and actually made a profit on the project.
Oh my gosh.
Um, yeah, so when people say, "What's your worst story?" Mine is I collapsed the 12,000 square foot building and no one was hurt.
Wow. Yeah, that's crazy. I mean, but just just the I can't imagine the time suck that took from you, and dilution of your focus on working on other projects, right? Just
There were no other projects. This was it.
yeah, that's
Yeah,
crazy.
for better part of 12 months, that was my job.
And so what, you basically scrapped it, you scraped the land, and someone came in and bought the vacant lot. Is that what
Yep,
was left?
exactly what happened.
Is there
Yep.
is there anything there now? Did anyone
Yeah,
rebuild?
they're actually building a gorgeous brand new apartment building there,
Okay.
which I wish I owned. But okay.
Good deal. Good deal. Well, Ed, this has been a blast, buddy. Always fun catching up with you.
Yeah.
I know that you as well. You're on my podcast. I was on your podcast. You host a Real Estate Underground podcast. Where, for folks that want to, tune into that, check it out, learn a little bit more about you, your company. Where's the best place to track you down and get more info?
Yeah, so Real Estate Underground is an excellent place to find us, and that's on Apple, Spotify, YouTube, wherever you get your podcasts.
Mhm.
You can always reach me at on our website at clarkst.com, CLARKST.com, and I'm Ed at clarkst.com. I'm a cheap date. I'm happy to buy you a cup of coffee, either in person if you're in the area or virtually if you are on Zoom. I love mentoring people. I love helping people figure out how to utilize real estate to break free from their W-2 jobs. And half an hour with me, I'll answer any question you have, and I'm happy to help you. So yeah, I encourage people to reach out.
Awesome. Good deal. That's very kind of you, Ed. Appreciate you being on the show. And again, always good catching up with you, my friend.
Yeah, likewise. Thanks. Good to see you, Kevin.
Alrighty, guys, that's all we had for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.